stockpiles. They were down 34 billion cubic feet last week, but that was a smaller drawdown than we expected. Analysts were looking for a decrease of about 40 billion cubic feet. So that sounds fairly bearish. Of course, we know about the warm weather pushing natural gas prices close to multi-year lows. Joining us now from Houston, Tony Franjie, natural gas analyst at Genscape. Tony, great to talk to you. Was this a bearish report on natural gas?
Yeah, it was bearish, probably about 6 BCF. Expectations were for a 40 draw, and it came out at a 34 BCF draw. The week before was actually more bullish than the week was bearish, because the week before it was bullish by about 14 BCF.
So are we just looking at a grossly glutted market in natural gas, Tony?
Yeah, for right now you definitely are, because you're getting extremely warm weather, and you had the impact of much higher production increases were more than offsetting the demand increases for this year. However, next year I see that changing.
Why is that?
Because next year, I mean, already production, if we look at it right now, it's flat to a year ago. And we expect production to be down next year, mostly from the drop-off in crude oil production, from associated gas production from crude oil. And we're seeing this already now in Texas and Oklahoma, in the producing region.
So getting past this potentially mild winter and the big oversupply, going into the summer of next year, you're far more bullish on natural gas. Why is that?
Yeah, we have not only lower production year on year in summer 2016, we also are going to have higher demand year on year. We have additional power plant coal retirements that are going to add more demand to natural gas next year. And we have a little bit more industrial demand coming on next year. In addition, if you look at the price of natural gas relative to the price of coal, it suggests even more natural gas substitution to coal. And so putting all those together, plus we're going to have more, we're already exporting more to Mexico. We hit record highs in exports to Mexico that Genscape monitors and measures. And we expect that to continue into next year. In addition, the first LNG export is going to be coming on in January. And so we're going to be seeing that. So we have a combination of significantly higher demand and significantly lower production.
Is that first LNG sale, is that by Cheniere Energy?
Yes, and Sabine Pass.
Right, which now has a new CEO. I know there's been controversy over the governance at that company. The LNG exports from the States, is that likely to become a huge industry?
I don't think it's going to be as high as what people are expecting, because the market is going to be quickly overflooded with LNG coming from the U.S., Australia, Canada. Cheniere was the first to come on and hit it. I don't expect it to be a big industry, no. Much smaller than what people are expecting right now.
Yeah, we know that some of the chemical people have been, well, this is a few months ago, we're saying, hey, we need this cheap natural gas if we're going to rejuvenate chemical manufacturing in the States. Will there be any shortage of feedstock potentially, do you think?
Next year, I don't see a shortage. You mean a shortage of feedstock of natural gas or a feedstock of ethane? Or I don't see any shortages next year of that. I do think we're overextended on the downside for next year natural gas at $2.20 for all of next year. I don't see shortages happening unless we go into the winter next year and it's a cold winter after what was a tight summer. Then we could get shortages next winter. But it would just be temporary, because any big run up in the price, all of a sudden the U.S. producers can get production on pretty quickly.
I mean, your shale resource is so enormous, isn't it? It looks set to last for decades, your shale gas.
It really is enormous. It's almost like synthetic storage out there. So what happens is the wells are what could be produced or could come online stays idle. Then when the price goes up enough, boom, we bring it online. And then when the price comes back down to an unattractive level, we shut it in. So they play around with it like it's synthetic storage, and it really is. It's quite impressive that they're able to do that. definitely not the case 10 years ago.
No, that's right. Everything has been reinvented in the past decade. Tony, thanks for joining.